The Dow and the S&P are just below the record highs that they set earlier this week. This whole rally that Dom was just talking about as well came even as our nation has also been setting a record for daily virus cases and hospitalizations. Is this mix sustainable? Here to discuss the stock market COVID disconnect, Gina Sanchez is CEO of Chantico Global and a CNBC contributor, and Jeff Mortimer is Director of Investment Strategy at BNY Mellon Wealth Management. Welcome to you both. And Gina, I think this is an important question to ask because even today, you could say, sure, the market's down, Dow's down a couple hundred, we're talking about maybe 1%. Its resilience, I think, is the story. What do you think explains it in the wake of the hospitalization count, especially on the COVID front, soon the death count ticking back towards record highs?
Well, I think that the markets immediately kind of assumed that this would be a temporary phenomenon, that COVID would have some, disruptive impacts, but that those impacts would be more or less temporary. And I think as this second wave starts to hit, we're starting to really challenge those assumptions. Some of these impacts are going to be more than temporary. They're going to be at least medium term, if not long term. And even with a vaccine potentially coming, we still have to visit how we think about pricing right now. We've let prices, PEs, get really high, assuming that eventually earnings would come back. If earnings don't come back, then PEs have to adjust.
Right. And Jeff, listen, I mean, we all can look ahead into 2021 and see the prospect of a vaccine. Hopefully Moderna's news is somewhere near as good as Pfizer's was, but we can see that positive scenario. We just aren't there yet. So what happens in the meantime? And are you concerned that we're going to see more officials in more states pursue even just targeted restrictions, targeted dining and using gyms and those kinds of restrictions, and that people will voluntarily restrict their movement as well in the kind of way that could slow the economy and perhaps slow the market?
I don't think we're in for the general lockdowns that we faced in February and March of this year. But I certainly think targeted slowdowns or shutdowns or mandates will be in our future, unfortunately. We know more about the virus today than we did back then. And certainly the impact that generic shutdowns has on economic recovery can be substantial. But I think we have to prepare ourselves for a difficult winter, potentially in the U.S., especially in the northern portions of our country. Certainly a vaccine is all good news. Better therapeutics are all good news. But I think what you're seeing this week may be a microcosm of good news on a vaccine leads you to value stocks, because value stocks do well when the economy is surprisingly strong, and a vaccine has the ability to turn that switch immediately. And yet then you're seeing days like today where, oh, wait a minute, even with a vaccine, it may take a little bit longer and we may face a more difficult winter. So I think the advice we're giving to our clients is make sure you own both here and not get over your skis too much on those growth assets, because eventually we think stronger economic growth is coming, but it's probably some choppiness in the near term before we get there.
Shepard Smith here. Thanks for watching CNBC on YouTube.